Normally, if you're under a year, that's a short-term capital gain, which is taxed at ordinary income rates, upwards of 40%. If you're over a year, then it's taxed at long-term capital gains rate, somewhere between 0 and 20%. If you have a carried interest, though, which is how most syndicators make their money, is with a carried interest, that's a three-year term in order to be long-term capital gains. And that's my point, is that if you're in that 2 to 3 year period and you're thinking, wow, this is long-term capital gains, it may be for your investors and not for you. So that's where you sit down with your tax advisor, say, okay, the investors are fine with their long-term capital gain. I'm not going to be so fine because mine's a short-term capital gain tax at 40%. So that's where you really have to pay attention. Now, we also have to look at, we look at 1031 exchanges. And by the way, you only have to do a 1031 exchange of your carried interest long enough to hit the 3-year rule. So you may have, if you're 2.5 years in, you may only need to hold that new property for another year, and then you can sell it, and then now your long-term capital gains, and if you don't want to reinvest in another property. So that's another thing to look at is am I a short-term versus long-term? That's a big difference.